Greed, for lack of a better word, is good. Greed is right. Greed works.
Hello everyone and welcome to episode 18 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out, we went through all of our legacy stocks and took care of all their excess cash, management settings, all of that stuff, expanded our market share wherever we could. And now we're just down to the bankruptcies, which most of them we're going to keep. And we still have some shorted stock in the semiconductor industry. And looks like we might be able to get to our experiment of testing whether or not buying options on stocks that are rated a buy or strong buy, whether that's generally going to be profitable. But before we get started on all that, I was able to get a copy of Jerome Vinecourt's game file. Back in episode 10, I was showing you the screenshots from this, where on April 30th he was already up to almost $1 quintillion. Of course, I read the numbers wrong in episode 10. I thought it was quadrillion. But no, it's almost $1 quintillion here. And he's accomplished it in only 4 months of game time, which is just unreal. It's just unbelievable. And basically what he did was he started out by buying a single company and had it buy the bonds of some distressed companies. He turned those companies around and bought options and nested those companies like a Russian doll, one inside the next. And so as the bond values increased, the stock options on those companies rose, and by nesting one inside the other, the growth was exponential. Now, I've been looking at this for, I guess, about a month now to try to incorporate some of these strategies into my series. And it looks like in the newest version that while these strategies will still be effective, I don't think making $1 trillion or $1 quadrillion inside of 4 months is going to be possible, because a couple of the loopholes was closed. First with the buying and selling of call options and put options. There's an equity check that takes place that was messed up in the version that Jerry is playing. He's playing in version 7.71. And if you sell calls, I think it's buy calls and sell puts, the counterparty equity check is not working properly in that one, where in the new version, if you want to buy or sell an option, a company will not be found if there's no company that can afford it. And what they can afford in this version is up to 25% of their net value. So if you have an option that's selling for or that costs $10 billion, the only counterparties that will be available are ones that have a net worth of at least $40 billion and have no other options currently in place. So in the new version, there's going to be a lot more limitations as far as how much wealth you can build with his strategy, but it's still effective. And hopefully we'll be using it when I have a better understanding of how it all works. Because this involves a lot of transactions, and I'm still trying to figure out exactly what order to put them in. But anyway, what we are going to be doing today is, first of all, we've got a problem that we've got to deal with regard to the index. All right, so a couple of episodes back, we had our insurance companies invest in long futures on the stock index, and it was kind of short-sighted of us to do that because the income is going down at each of our insurance companies. And the reason being that we have not been trading in the commodities ever since the new version came out. Right? So all the volatility that we had in the commodities was creating all kinds of income, causing the stock index to rise at a really rapid pace. And on December 1st of 2019, we only had a net worth of 10 trillion. And so in, 9 months' time, we went all the way up to almost 150 trillion. And now we're kind of falling back because we don't have that income coming in anymore. And I suspect that if we don't replace that income for next year, this is really going to slide back even further. So these options, or the index futures that we own, are currently losing about $8 billion a piece, for a total negative of $260 billion. And we have to do something to mitigate this damage, because it's probably going to go down even further. All right, and unless we get a change in the interest rate policy, or we have some scenario come up that causes a boom, this could slide all the way back to under 10,000. So we have to decide how we're going to deal with it. Under normal circumstances, I would cover all of these and then sell the index short. But the problem with doing that is that that all these losses will show up on the insurance company's earnings report and cause his income to go down even further. Because right now he's showing $1.21 a share, which is way down from the $3 a share he's been making. And if we take that loss, his stock price will crash. Right now he's trading at about 4 times his net worth. So we have to decide if we want to take that loss or not, number one. And number two, whether or not to sell short the index from this point moving forward. So under normal circumstances, I would go ahead and close all of those out, but I want to get the short sale ones in first. So what I'm going to do is I'm going to have RakeM Insurance sell short the index. I'm going to do 40 transactions at 100 contracts each. Then I'll go to the other insurance companies, Tokyo and Mitsui, and do the same thing. And I want to have at least as many contracts shorted as what they have on their long positions. All right, so before we do anything else, that's what I'm going to do, and I will be back in just a minute. All right, so RakeM Insurance now has shorted the index, and we started running out of counterparties that could do the full amount. But we have shorted the index about as much as we have long positions. We now have short positions. And to show you why I'm doing that first, selling the short positions first, and while I was doing it, the index rose 3,000 points, which I did not expect. But this should go back down because RakeM Insurance's income is about to drop. So just to give you an idea, his price was $238 when we started the episode 2 days ago on August 20th. It's risen back up to $280. he peaked at 309.89. And he may go back up to that between now and his next declaration, which is on October 8th. And after that, it's going to fall. And the reason I say that is, if we look at the largest market cap, RakeM Insurance is at the top, and he's by far the largest company in the entire game. Matter of fact, he probably represents, all by himself, about 40% of the index. So as the stock price of RakeM Insurance goes, so goes the index. And what we're going to do is we are going to sell short the index some more at our other insurance companies. And then we're going to have RakeM Insurance cover his losing positions of the index to generate a loss and hopefully manufacture a drop in the stock index. All right, so I'm going to have Mitsui Marine and Fire and Tokyo Marine and Fire both sell this stock index short. Then I will sell it short as well. Of course, by the time that I get to it, we'll be down to probably transactions of like 25 contracts or less. But we're going to sell it short basically as much as we can, and then I will cover all of his losing positions on the long index and try to generate a crash. And the only thing that might thwart this strategy is if, for some reason, the Fed decides to initiate a easing policy, all right, which will cause the stock index to rise. But it'll probably be mitigated by the fact that the insurance companies do better when the interest rate's high. All right, so we're either going to do very well or we're going to have basically a wash. But we're going to hope for the best here and sell it short and try to manufacture a drop. All right, so I'm going to go over to Tokyo and Mitsui and start selling short the index some more, and I will be right back. Okay, so I wasn't quite fast enough to get all these sold short. We've had a drastic drop in the stock index. So let's see what that is doing to us. We're making money on our short ones and losing money on our long ones. And I was hoping to get all this done before the stock index fell, so that we could take less of a loss on these. Instead of 8 billion, we're now losing 10 billion on each one. Of course, the fact that I sold short the index is probably making the amount of the loss about the same. Actually doing a little better. It was negative 260. Now it's like negative 242, so not quite as bad. So what we need to do is we need to invest in some more stocks to solidify our net worth. And basically when we get an easing policy, assuming we get one, that's probably about when we will cover all those features. So anyway, over at the bank, we've got a bunch of stocks that we've inherited via bankruptcy. We took care of a few of them, and then we picked up a few new ones. But I've already selected which ones I'm going to keep. And basically, it's all the ones that are worth, the ones that are worth less than $1 billion, we're probably not going to keep. The only exception being Progressive. But unless in these industries there's a bunch more that we can buy for cheap, then we'll keep them. Otherwise, we're just going to sell them off. So what I'm going to do to begin with is I'm going to buy the rest of Progressive Insurance from the public, then buy this 52% from the bank. And I'm going to be dealing with all these stocks myself and putting them all under Progressive, and then we'll merge them into RakeM Insurance. All right, so first things first, I'm going to buy Progressive. All right, Alpha Industries, that we added a bunch of assets to, has had a breakthrough. All right, now before we start adding stocks to him, let's get his management settings fixed up. So he's reasonably competent. He's got tax loss carryovers. He has no... Well, he does have some debt. So let's give him $1 billion and take care of that. In fact, let's make it $10 billion. All right, let's have him buy back his bonds. Let's go back over to the bank and see what's the next one we're going to start buying away from him. So Itochu is in bookstores, which we're not really interested in. He's way down here along with Hagemeyer. This is a really small industry. The industry leader is Walden Books. And he's only got $7 billion in assets. So we're really not interested in anything in this industry at all. But we can use him as part of our options test strategy thing. So I'm going to buy him away from the bank and just hold him in reserve for right now. All right, and let's look at Hagemeyer while we're at it. Let's have him pay off the majority of his loan. Let's see what... We'll just buy that away from the bank too. Normally I wouldn't do this, but since the money's going to the bank, it's fine. If it was going to the public, I wouldn't do it. Alright, so that's 2 down. Alright, let's take a look at Red Lobster here. Okay, so he's got 2.6%. McDonald's is in bad shape. Of course, this whole industry is kind of in bad shape. Wendy's is owned. There's a lot of good bargains here. So I think what we want to do is take a look at McDonald's, see why he's doing so bad. The options he's losing money on, and his futures he's making money on, but he's got all this debt. Well, what we could do is we could buy him throughout the futures. We've got options on ExxonMobil that he's losing money on. Cover those. We end up with 30% market share. Alright, so I'm going to buy Red Lobster away from the bank. And then I'll buy McDonald's, merge the two together. And we'll give it to Progressive. few minutes ago we had a crash of the stock index and it went down to 18,100 and change. And now it's back up to 18.5, almost 18.6. So I wasn't going to cover McDonald's short positions on the index, but since it's headed back up, I went ahead and covered those. I also bought back the options that he had sold on Exxon, so that we only lost about 800 million on that. And now we just have a whole bunch of cash, our assets, taxes. Our bonds were trading at $66. So we made money buying them back, and so we owe taxes now. And our income is probably going to go up because of that, and it is. So all I'm going to do now is I'm going to go ahead and buy these cheap guys down here, Darden, Arby's, and Luby's, merge them and pay off their debt, and then I'm going to actually grow negative and increase our R&D. But first we're going to buy these others. I would buy Wendy's too, but he's mostly owned by Prudential. So I'm going to leave him alone, but these others I'm going to buy and merge in, and I'll be right back. Okay, so we're going to reduce our growth rate to a negative 2%. We're going to increase our R&D to 12%. And we're going to cut our dividend to 42 cents to give this a 2% statistic. Our management is very incompetent, so if it doesn't come around at 12%, we'll increase it to 16. But we're going to start at 12 and see what happens. Okay, so that's it for him. We just need to give him to Progressive Insurance now. Okay, so we have taken care of Red Lobster here. We replaced him with McDonald's. And I've taken possession of Hagemeyer and Itochu. Progressive I now own. And next up is Boise Cascade. He's in building materials and he just has too much debt. And these two guys are both ripe for takeover. So we're going to buy them, and the returns here aren't too bad. And everybody's kind of in trouble debt-wise. So what we're going to do is we're going to buy Boise Cascade. Even though he's trading so high, with how much debt he has, it's really not that bad, really. Plus, the bank's going to get this money. So we're going to buy him from the bank. We are going to give him a whole bunch of money. Let's see how much. This one's going to be about 10, maybe 11 billion. So let's give him 25. Let's also give him an extra. How much debt did he have? He had around 3 billion, I think, or 2,500 or so. Let's give him 30 billion. And I don't know if he's using Bank of RakeM or not. Got no bonds, so now we'll take him and we'll buy these other two guys. Alright, so we gave him too much money. Or maybe we didn't. Let's liquidate John's man bill here. Alright, let's see if anybody else is well priced to buy them too. Just this one down here, and he's not really that big. This whole industry is overexpanding, but they're all running out of credit. How much of this one is owned? Nope, don't want him. Look at Lafarge. He's a bargain. Alright, so I think what we want to do is we want to grow at 1%, increase our R&D to 18%. We'll leave our dividend 0 for right now because I expect this income to drop drastically when we increase our R&D. Currently mediocre, so we're probably not going to make any money into this industry for a while, but that's going to change once all those guys start losing money due to their overexpansion, and at that point we'll increase our growth rate and start making a buck. I mean, these returns are low, their dividends are high, and they're running out of credit. And if we get a construction boom, we'll do just fine. Okay, so our index is back on the way down. And price of the insurance company has dropped a lot. What we could do to help this along is cover our futures positions and wipe out or lower our income. Not sure if I want to do that this year though. I might want to wait until next year to do that. No, I think it'll be better if I do it this year, because then next year we can come back strong. Alright, I'm going to go over to the insurance companies, cover all of our long positions on the index, and then we'll get back to buying stocks. Okay, well that was weird. Just as it was heading all the way down to 17 and change, it has a rally now. No idea why it's having a rally, or if it will last, especially since the interest rate has just jumped another 1/4 percentage point. If we go look at largest market cap, our value has dropped quite a bit. So why is this rallying? See, and now it went up to 19, now it's back down to 18.5. This thing can't decide what it wants to do. Alright, it's still dropping. So I guess before it drops any further, we will go ahead and cover all these. I do expect it to drop, especially if I take the loss now and put these losses on the books. So we'll be manufacturing a drop. So I'm going to go back to selling these off, so I'll be right back. Tokyo here doesn't have any shorted futures on the index, so I'm going to go ahead and have him short the index. And let's see how many contracts we're able to get. All right, and of course it's dropping again, so I'm going to try to get as many as I can, and I'll be right back. Okay, I'm not sure how many I've got, but we're only able to do 40 at a time now. But the interesting thing that I want to point out to you on this is that the whole time I was buying these, the index was dropping. But at the same time, the contango price remained about the same. Okay, so it went from 23 down to 22.6, and then hovered right in the 22.5 to 22.7 range as I was buying all of these, despite the fact that this dropped over 1,000 points. And usually this is an indication that the market is going to rebound, or at least all the analysts think that it is. But the thing is that we just covered all those long positions and we took a loss. And until September the 30th, the analysts will not incorporate that into the analysis that goes into those contango prices. So right now we know something that apparently the rest of the market doesn't. And hopefully I'm not wrong in that this is going to drop even further. I think it's going to go down to somewhere around 12 to 13,000, maybe lower, depending on what happens with the interest rate. Gold is way up, way up, and we have a bunch of stocks that own gold. Well, I thought we did. I guess we have a bunch that own silver. So PBR owns gold and I own gold, and I'm not really sure what it's going to do. Looks like it's peaking and maybe heading back down, so we need to keep a close eye on gold. Alright, so where were we before we started messing with all of this? I was working on Boise Cascade. So we have 11 billion in cash. We've already changed all of our management settings. So we just need to give him to Progressive. I want to go over and look at Alpha Industries real quick. He had a technical breakthrough. It's supposed to be making a lot of extra money, but I'm more concerned with how that's affecting these other guys. So Intel Corp here. Oh, how did he lose a bunch of money? Lost 10 billion on something? Don't know how that happened, but that's good news for us. So right now I'm making 5 billion on him, making 5 billion here, making half a billion here. Let's take a look at net. He's got a lot of cash. He must be making money on the index. And he's not losing as much. So I'm going to cover my position on MEC. Let's take a look at Motorola. Okay, so his income is dropping, but he's rated to buy. There he is right here. Can't grow any faster. 60% is the fastest you can grow. We are very capable now, so we could lower our R&D and increase our profits. I don't think Motorola is really going to drop anymore, so I think I'll cover my position on him too. But Intel has a long way to fall. He's in the process of doing it. I'm up 13 billion now. 12 and a half anyway. Alright, so we've got Boise Cascade then. HP we're going to sell. That brings up Hartmax. Then textiles, which is a small industry. But we could use him as part of our options experiment. So let's buy him from the bank, give him enough money to pay off his loan, and hold him in reserve. Next up, I don't know what I'm going to do with these three. We'll look at those last. So General Mills, packaged foods. This is a decent sized industry. And returns are pretty good too. Growth is terrible, but the returns are good. We have 11%. How much of Kraft is owned? Okay, well, that's unfortunate. I'd really like to buy him. So we can add Hormel and whatever this one is, Campbell Soup. That would give us, that's 4.2, that would give us 15% to make us the market leader. This guy's growing at 40%. So we'll need to freeze him and everybody else in here that's growing like crazy. So, let's see. What is it that we had here? General Mills. So I will buy him from the bank and give him some money. Market plunge surprises complacent investors. So our shorting of the index is paying off. It's not accurate. I don't think that's accurate. Let's take a look. Yep, 179. Drop, drop, drop. Making money on our futures though. That happened quick. It's not even September 30th yet. Hopefully it stays up so that we can't, or stays down, I mean, so we don't have to cash these out until after October the 8th. I want any income from those to go on next year's reports, not this year's. Okay, so let's see what General Mills needs. He needs about 15 billion. Let's give him 20 because we're going to have him buy those other two companies. Make sure he's got a cushion. All right, so let's buy Hormel. And now we will buy Campbell Soup. All right, we don't need to grow at -6. Make it just 1%, and we'll freeze all these other guys. Give our dividend a boost. Let's split the stock here. Okay, Vertex, which we don't own, sank on news that the company halted developments of its key new cholesterol treatment that was heralded as the engine to reignite the company's sales growth. Okay, I don't know how big Vertex is, but if he was big, we'll have some opportunities with organogenesis there. But let's get General Mills done first here. Alright, so we are reasonably competent. Income's going from negative to positive. And a huge tax loss carryover, so we won't have to pay tax for a while. We are the market leader. So we're going to go with 10% on the R&D, 1% on the growth, 60 cents on the dividend, and then we will freeze everyone here. Okay, and now let's take a picture of the summary and go freeze everyone. Alright, so let's go to the bank. All the earnings reports I've been looking at, they've all been up. Okay, there's the first one that's down, but we don't care about that one really. Alright, so I'm just going to go down this list and freeze everybody, and I'll be right back. Okay, so we've got everybody frozen, and I think that's all we want to do here. We may pick up Kraft, Heinz, and Pillsbury via bankruptcy, especially if Kellogg here continues to expand at this rate. And even though we have him frozen, he's got cash coming in off of the index. So I think he's got it. Yeah, he's got cash coming in off the index. So he may not be forced to reduce his growth rate for a while, especially with this kind of return. So we'll just kind of hang on and see what happens here. Index is down below 13,000, but the bad news is that gold dropped. However, silver is up and still going up. So hopefully gold will turn around. Our interest rate dropped back from 11 3/4 to 10 3/4 to 10 1/4. But the policy is still neutral. So we'll just keep an eye on it. Oh, and now silver's dropping. Wow, that's moving quick. Let's see, what do we want to do? What do we have that has gold and silver? PDR? Show you a little trick. If you just bring up the projection and then close it and just hit enter, nothing really happens in terms of time passing, but the commodity prices will change. It's still dropping. Now it's going back up. Now it's not changing a lot. Sometimes it does. In older versions it was more drastic, because the pricing algorithm has really been calmed down. But if you're ever in a position where you had a target price on a commodity, like let's say our target was 20 bucks, and it was just under, it's just under that target, you can use this as a way to just kind of wait or get the price to be above your target and then immediately sell it off. It looks like it's just not going to change that much under this version, but in earlier versions it works very well. So I guess we're just going to move on to our next stock here, because that's not really getting us anywhere. Okay, we own Berkshire Hathaway and he's in bad shape. He's one of the bankruptcies that we have to deal with. He's down here. So he is done. Let's go ahead and take a look at Berkshire. He's going bankrupt again. These bonds are really low. I wonder if anybody owns them. Let's see if I can buy them. Buy corporate bonds. Okay, somebody already owns them. If we buy him from the bank and turn them around, those bonds are going to be worth a lot of money. In stock of BNI. Is BNI a stock that we want to keep? I have NA on here. What was I going to do with him? What's NA mean? Not applicable. Look at all these companies going bankrupt. Holy cow. Did I look at the right thing? Okay, no, I must have been looking at the holding company industry. There's some bargains to be had here, though. Returns aren't that great. And the demand's negative, so I think we're just going to sell this. And I will buy Berkshire Hathaway from the bank. And he will be the last. Oh, nope. Can't buy 100%, so we'll just sell it. Get him out of here. He's gonna go bankrupt anyway. Okay, so he's done, and we've gotten rid of both of these. Alright, so next up, All these are under 100 million, or you mean 1 billion. So let's look at the biotechnology industry. A lot of companies here. There's a few bargains. They're all minor factors. Demand is double-digit demand. So let's buy up these bargains, give the company a lot of money, and just have him grow like gangbusters. Alright, so I'll buy him from the bank. Let's give him 10 billion. Let's also give Progressive General Mills. Let's have him buy and liquidate Center Core. Buy and liquidate Millennium. And Abgenix here. Alright, they're turning down our offer at 20%. He's already trading at almost a 1-to-1 ratio. So I'm going to merge them into my stock, and then if SoftBank has any interest in Organogenesis at the end of it, we'll just do a green mail to buy back those shares. So let's do a merger. And SoftBank was cashed out, so that's fine. Alright, there's nobody else I want to buy. So what we're going to do is we are going to grow at 60%. We're going to max out our R&D until we're reformed. Let's make that 25%. And we're losing money, or should be. I'm going to make the dividend 0 for now. Alright, let's give him to Progressive. And let's split his stock. Okay, let's see where we stand now. Only worth 100 billion. We want to get some more stocks into him that are worth more. But when we give him to RakeM Insurance, he's actually worth a lot of money. I'll take a look at Intel here. He's still in bad shape. He doesn't declare for another couple of months. He's still ready to buy. I'm going to turn on the ticker and let it run to October the 1st. And then we'll take a look at what the projections are for the insurance companies. So for RakeM Insurance, his income's going down, still up from last year. Tokyo, down, still up from last year. And Mitsui, down but still up from last year. Losses of 200 billion, and our index is back on the rise. Let's see, how is that going to play out? So we have futures that we're making money on. And when this earnings report hits, it's going to be up from last year, so we should see a spike for maybe a week or a month. And then it should drop because our earnings are going to go back down to this level, maybe $1.50 a share, which will be down from its previous average of $2.50. And it just jumped again. So I think we want to cover our short positions on the index right now, and then short it again when we have the spike. All right, so I'm going to go ahead and cover all of these positions here, and I'll be right back. I came here to look at the silver, but I had forgotten about this stock index, these long positions that I had on the stock index. I think what I'm going to do is I'm going to cover those when the index spikes, and I'm hoping it'll get back up to 15,000. But even 14.5 would be good enough. And I'll cover them then. I'm going to hold off on silver and hope that it goes up some more. It really just kind of depends on if it stays above 22 or not. If it drops back to 20, I'll go ahead and cover them. All right, so we don't have any index futures except for those 500 contracts that I have. So let's go back over to the bank and see where we start. Actually, let's go back to me and see where we stand. Looks like we're done. He's not really moving anymore. He doesn't declare till November 22nd. Okay. Let's go to the bank. Here it is. All right, so this industry is kind of small. This industry is decent sized. This one, it just depends. Sometimes it's big, sometimes it's not. Let's go take a look. And we can pick up this one cheap. Got a wide range of credit ratings here. The returns are pretty good, and they're growing like there's no tomorrow. So let's buy this guy and these two, merge them together and start making some money here. His management's just in bad shape, but we can turn that around. Okay, so we're decent sized. Our management is grossly incompetent. So let's increase our R&D to 12%. Actually, grossly incompetent. Let's make it 21%. We'll kill our growth, make it 0. Kill our dividend. And let's see if these guys are frozen or if they're not. They are not. So we will freeze everyone in here. And that's how we will proceed. Okay, let's go over to the bank and freeze everybody. All right, so we're into October and the bank has declared its earnings. He finally made some money, which is much better than last time, where he lost a bunch. And U.S. healthcare here is making money off the index, which is why he's up. And I don't know that there's much we can do about it except to have the index rise. But I don't think that's going to happen for a while. So we may just be languishing here for a while. Especially with our management rating as low as it is. But there is a good amount of money here. You know, he has 30 billion in assets, which is what we have. And we are just a 20% share, so there's 100 billion. 150 billion here. All right, so let's give him to Progressive. All right, let's take a look at Progressive. See how many stocks he's got now. 5. All right, and silver just jumped. So before that drops any, because it looks like it's going to, I'm going to cover all my silver, including my physical silver. And I'll do the same for any over here that have physical silver. And I'll be right back. As soon as I sold my physical silver, the price dropped $3. So before I sell it for PBR or anybody else, Nomura is the other one, I'm going to wait and see if that climbs back up. Index is pretty much holding steady in the 13,000 range. But it'll be interesting to see what that does here in about a week's time when the insurance companies all declare their earnings again. Alright, so let's go take a look at HeartMax. He's in textiles and compare. Oh, not that one. We already took care of him. We are just using him for our options experiment. So let's go look at Clayton Homes. He's going from negative earnings to positive. And mediocre. Industry is deteriorating. There's a bargain. There's a bargain, but he's owned. Here's a bargain. Bargain, bargain, bargain. Returns aren't that great, and this guy is growing way too fast. And the demand is negative. So we can pick up a nice big share here. Let's see how many assets he's got. 12 billion. So let's buy him and then we'll merge Clayton Homes in with him. We'll make Del Webb here the parent. he's got 13 billion and 8 billion in debt. Let's give him 30. Alright, so here's the first insurance company. He earned 572. Way down from the 34 he made in the last quarter. Alright, let's split Del Webb. Tokyo, $6 a share. Down from 11. Alright, so let's buy Pulte Homes here. Progressive made $1 a share. He's the only one that's up. Of course, he's the one we're giving all these stocks to. Buy back these bonds. So let's take a look at these futures. We've shorted the stock index, so let's cover that because I think it's going to spike. We're just waiting on RakeM Insurance to declare his earnings. Alright, so let's buy Clayton Homes next. Alright, so there we go. Down from the estimate, down from last quarter, but up from last year. His estimate for next quarter is $1.18. So less than half of what he was making before. He's rated to buy. He wrote off a whole bunch of mortgages. Looks like it's going to drop anyway. No spike. No spike, and it's just going to drop. And holy crap, silver dropped like crazy. I think this is probably going to be a rough year coming up. Unless we can get a scenario to help us out. I guess we'll be focusing on stocks primarily and options, which are a little bit more predictable. Alright, let's get back to what we're doing with Del Webb. Alright, so we got 20% so far. And let's see how much of this one is owned. We just picked up another biotechnology company. 56% is owned, so we're not going to mess with him. And we got over 20%, so we're in all right shape. Let's take a look at him and see what's going on. He's got a little bit of credit left, not a lot. He's not being buoyed by any options or futures or anything, so that 40% is kind of a false figure. But we can freeze everybody and just cut him off right now. Let's go to the summary. Okay, let's freeze everybody and then we'll come back and do our management settings. Alright, so we got a 1% dividend now. We're spending 12%. And we are grossly incompetent. So we're going to make our R&D 21. We'll kill our dividend. And we'll also kill our growth, at least for right now. Here's the earnings report. He made 2 cents. Earnings are way down, and his projection for next time is only 6 cents. But we've already been upgraded to very incompetent, which is nice. Leads me to believe we won't have to do a restructuring. Alright, let's give this to Progressive. Progressive's now up to 170 million, or billion, excuse me. 180 billion in stocks. So I'm going to give him another 200 billion and have him buy 180 billion worth of bonds and mortgages. Long bonds are at 84, so 85. That's fine. We'll buy 100 billion worth of those, and we'll put the rest in subprime. Okay, so let's buy 75 billion worth of subprime. All right, PBR is way up. Silver's back on the rise. And the index is kind of edging upwards too. Okay. He's been at this same position for a while now. He still hasn't taken care of these. This negative cash balance. The analysts have finally realized he's in bad shape. I don't know why his rating hasn't, or his price hasn't come down though. Should be bottoming out by now. He's still trading at 3 times his value. Okay, let's see. What are we doing next? We got him done. Now we need to deal with Bond. He's in the software industry. I think we already have something there. Yeah, Real Networks. So we'll just have Real Networks buy it and merge it in. So HRC is next. Health. What is that? HRC. Did we already do it? I think maybe that's what we merged into here. Alright, so Winn-Dixie then. Now this industry is fairly large as well. A&P is a bargain. Wow. So is AMS. Let's buy him right away. All right, so he needs 20 billion. Fred Meyer here. Trading a little high. So what I'm going to do is I'm going to buy assets from Smith and from Meyer, and then we'll buy all of Winn-Dixie from the bank, and then we'll sell off our stock of Meyer. I'm on the wrong one here. All right, let's go back to A&P. All right, let's sell this. And buy Winn-Dixie. We've shorted the index and it's not going anywhere, so I'm just going to take the money out. 30% market share. Growth is flat. So let's change our growth rate to 1%. We are very incompetent, so we'll make our R&D 16%. And let's get rid of this as well. $16.1, and we'll leave the dividend where it is. All right, income's going up. Industry is deteriorating, but let's take a look at the returns and see if we need to freeze anybody. All returns are pretty good, so I don't guess we need to really freeze anyone. We'll just let this guy continue to grow and use up his credit. All right, let's give A&P to Progressive. And who did we replace this guy with? It was HMA. All right, so does the bank have anybody left? I don't think you should. Oh yeah, Enzo. So we'll just have ORG buy it. Yes, I think we are ready to do our test, but I need to check and see where we are on time. So I'll be, hang on just a second while I check that. So it would appear that I have drastically underestimated how much time I've been playing. But yeah, we're out of time for today. But we had some interesting things that we had to explore today. The stock index and the commodities in general, after all the changes that have been made in this new version, we're still trying to figure out exactly how those behave. And you know, they're fundamentally still the same. It's just moving a lot slower with a few more quirky behaviors thrown in. It would be nice if I already understood how to predict them, but there's still a bit of an enigma. So, but as far as the index goes and our the stock price on our insurance company, you know, we lost half of our value as a result of losing all the income from the commodities, and I don't think that that's going to change anytime soon. I think it's going to take us about a year before we'll fully recover. So over the next 5 episodes, we're going to be running the experiment. At the beginning of the next episode, we'll run our experiment with the stock options. We'll at least get that started. It'll probably take us 2 to 3 episodes before we decide whether or not it was a success. But it's probably going to take us the next 5 or 6 episodes before we are fully invested everywhere that we want to be in terms of stocks. And we're going to have more money left over when we're done with that. So we're going to be looking at, hopefully, a successful experiment with the stock options, and that we can employ that strategy on a larger scale. And we'll also take another look at what Jerome was doing in his game. Hopefully I'll have the steps figured out on that by the time we get there. But anyway, that's what we have to look forward to. If you have any questions, of course, about any of this, just leave a comment below or visit us on the forum. But anyway, that's it for today. Thank you for joining me. I hope you enjoyed it. If you did, please like or share. And until next time, this is RakeM saying, have a good one.